As of Monday, April 27, 2026 at 1:06 p.m., the market is currently open and IREN stock is trading at $50.64. This represents a downward intraday move of approximately 2.65% from the previous session's close. While the numbers on the screen show a minor retreat today, the story beneath the surface is one that most traders are completely missing because they are still looking at this through the lens of a simple crypto miner. The reality that you need to wrap your head around right now is that IREN has effectively stopped being a proxy for the price of Bitcoin and has transitioned into a full-scale energy infrastructure play. While the crowd is watching the hash rate and the mining difficulty, the institutional desks are looking at the 2.75 gigawatts of signed power capacity in Texas. That capacity is essentially the new digital gold, and it is far more stable than the underlying asset they used to mine. If you think IREN is just following the swings of the crypto market, you are operating on old information. The gap between what the market expects from a former miner and the reality of their new high-performance computing identity is where the real opportunity is currently hiding. Establishing common ground here is pretty straightforward. Most people look at IREN stock and see a company that lives or dies by the halving cycles and the volatility of the digital asset market. They see a ticker that moves in lockstep with the broader crypto sentiment, often being used by retail traders on the Robinhood app or through various investing sites to get quick exposure without owning the coins directly. The general belief is that when Bitcoin dips, you sell your mining stocks. However, I want to challenge that perspective. We are seeing a massive divergence where the energy assets owned by these companies are becoming more valuable than the mining operations themselves. We have entered a period where the power substation is the moat, not the ASIC miner. IREN has secured a massive advantage in the race for power, especially as US-based data centers face incredible bottlenecks. While others are waiting years for grid connections, IREN already has the keys to the kingdom in places like Childress and Sweetwater. This isn't just about diversification, it is a fundamental shift in their DNA that the market is still trying to price correctly. Recent stock movement has been a whirlwind of high-volume trading and institutional repositioning. In just the last few trading sessions, we've seen volume spikes that are 50% above the 3-month average, which usually tells us that the big money is making a move. Institutional activity has been particularly aggressive since the announcement of IREN's inclusion in the MSCI index. This move alone has triggered a wave of passive capital inflows from funds that manage large-scale ETFs and indices. When you see a stock like IREN bouncing from yearly lows in the $30 range to testing the $50 level, it's rarely just retail excitement. It's a calculated reevaluation of their asset base. The sector momentum for AI infrastructure has been the primary tailwind here, overshadowing the recent softening in the crypto markets. Even as digital assets face some resistance, IREN has maintained a relative strength that suggests the market is starting to value their 150,000 GPU fleet as a standalone revenue powerhouse. This internal friction between the old mining business and the new AI cloud services segment is creating a unique volatility profile that sophisticated traders are exploiting. If we look at the trading data from Fidelity Brokerage and Interactive Brokers platform over the past few weeks, we can see a clear trend of buy-the-dip behavior every time IREN touches its 50-day moving average. This suggests a strong underlying support level that didn't exist a year ago. The market is effectively setting a floor based on the value of their hardware and power contracts. We also need to talk about the short interest, which remains a significant factor in the daily price action. With short open interest sitting at roughly 18% of the free float, IREN is a prime candidate for rapid, violent moves to the upside whenever positive news breaks. This is a classic tension-building scenario. You have a large group of bears betting that the AI pivot will be too expensive or too slow, while the reality of a 5-year contract with Microsoft worth nearly $10 billion stares them in the face. This kind of disagreement between the short sellers and the long-term bulls is exactly why the intraday swings have been so aggressively lately. To understand how we got here, we have to look at the business model. Originally, IREN was built as a vertically integrated Bitcoin miner focused on using 100% renewable energy. The idea was to build data centers where the power was cheap and green, then use that power to run high hash rate machines. It worked, and it allowed them to reach a 50 EHS hash rate target recently. But the real genius was in the infrastructure. They didn't just rent space, they built the substations and secured the land. This vertical integration is what allowed them to pivot so quickly into AI cloud services. Now they are leasing out that same computing power for AI training and inference. They've essentially built a two-sided revenue engine. When mining is profitable, they mine. When the demand for AI compute is higher, they shift the focus of their infrastructure. This flexibility is what separates them from the single-purpose miners that are struggling to stay relevant. Their current fleet includes a massive number of NVIDIA B300 GPUs, which are the current gold standard for AI workloads. By the end of 2026, the projected annual AI cloud revenue could exceed $3.7 billion, which completely changes the valuation math for this company. The financial health of the company has also undergone a massive transformation. They currently have about $2.8 billion in cash on hand, which is a significant war chest for a company of this size.
This liquidity is critical because building data centers is an incredibly capital-intensive game. While some investors are concerned about the possibility of a large share issuance to fund further expansion, the reality is that they have already secured billions in financing for their GPU fleet. The prepayments from major tech clients like Microsoft cover a huge chunk of their capital expenditures. This reduces the risk of the dilution death spiral that many small-cap tech companies face. When you're looking for investment help or researching on investing sites, this is the kind of detail that often gets glossed over in favor of simpler headlines. The debt structure and the prepayment terms are actually much more favorable than what the broader market seems to realize, which is another example of that expectation versus reality gap. Now, I want to hear from you. We're seeing a lot of debate about whether these former miners can actually compete with the big box data center providers. Comment below and let me know, do you think IREN's power advantage in Texas is enough to beat out the traditional tech giants in the AI race, or is the risk of share dilution still too high for you to take a position? Looking toward the future, the outlook for IREN is tied to a few specific catalysts that could send the stock in either direction. The upcoming earnings report on May 7th is the big one. This is where the rubber meets the road. Investors are going to be looking for the actual margins on their AI cloud services. If they can show that they are hitting that 70% plus margin target, it will validate the entire pivot and likely trigger a massive re-rating of the stock. On the flip side, any sign that the deployment of the B300 GPUs is facing delays could lead to a sharp pullback. There is also the macroeconomic pressure to consider. If we see a broader slowdown in AI spending or a significant shift in energy regulations in Texas, it could impact their long-term growth trajectory. However, the most likely reality is that the demand for high-performance computing will continue to outstrip the supply of power-connected data centers for the foreseeable future. The risk profile here is undeniably high, but it's a calculated risk. For those using a self-investing approach or managed services like Schwab Intelligent Portfolios, IREN often appears as a high-volatility satellite holding. It's not the kind of thing you bet the entire house on, but it is the kind of asset that can provide massive alpha if the AI transition continues at its current pace. We are watching a company recreate itself in real time, moving from the periphery of the financial world into the heart of the most important technological shift of our generation. The tension between the skeptical view of them as a crypto relic and the reality of them as an AI infrastructure titan is what makes this ticker so compelling to watch. In summary, the core insight here is that IREN is no longer just a bet on the price of a coin. It is a bet on the scarcity of power and the insatiable demand for AI compute. While the expectations are centered around the volatility of the crypto market, the reality is a story of infrastructure, massive institutional inflows, and a strategic pivot that is backed by billions in cash and major tech contracts. Today's price at $50.64 reflects a market that is still a bit hesitant, still weighing the risks of dilution against the potential for massive revenue growth. But as the numbers from the AI cloud segment start to hit the bottom line, that hesitation is likely to evaporate. Whether you're trading on the SoFi Active Investing platform or holding a long-term position through Fidelity Wealth Management, the key is to look past the intraday noise and focus on the gigawatts and the GPUs. That is where the real value is being built, and that is what will ultimately drive the next phase of this company's life in the public markets. Like this video, comment your thoughts, share with your friends, subscribe for more updates.